Vertiv. And Vertiv designs, manufactures, and services critical digital infrastructure products for the data center. Now, that sells quite well nowadays because anything data center related is going to do really well. These guys are up 152%, up almost 1,000% over the 5 year. Not too long ago, you could have bought the stock for $12.43. Now it's 10 times more expensive. And when I look at this business, to me, I first want to understand the business and the type of product that these guys are putting out. The reason it caught my attention is that, not to take anything away from these guys, but they're kind of riding the AI train, and they're selling a lot of what I'm going to call lower value products that are part of the data center, but they're not like the Nvidia GPU chips. Those are the most valuable piece right now, right? Or other chipsets. That's where the value is in the data center. These guys are selling cabinets. They're selling, power management, thermal management, piping, so you can liquid cool the operations. And all these products, they're necessities, right? But they don't have any really strong patents. So other competitors can come in and compete to replace them or compete with them and drive down prices and profits. So when I look at Vertiv, just keep that in mind. It's in the data center, but it's not Nvidia. Nvidia is really commanding great margins, just super profitable. Now let's take a look at the fundamentals of Vertiv. So this is a data center company. Their market cap, again, not too long ago, these guys were a tenth of their current value. So they're not too long ago, they were a $4 or $5 billion market cap company. Now they're 45 billion. Their PE is 81. Wow. 36 for forward. Strong buy, 11%. So let's take a look at them. So first, the growth isn't all that. Again, they're up, 10x. So I'd expect the revenue should have been growing like 100%, 50%. Just show me a big number. 13.2, and you're not the biggest company in the world at 7.5 billion. So that's interesting. The last quarter does look good at 19, but again, that's not like incredible growth. That's just okay. It's good, but it's not like awesome. Oh my God, I can't believe they doubled the revenue. Like Nvidia. Nvidia doubled their revenues in 1 year. That's incredible. So, okay, so the top line revenue isn't all that impressive. Gross margins, unimpressive. So yeah, you're in the data center, but you're in the data center. I just showed you the Honest Company. That's a consumer staple stock. They have better margins than these guys. Now that's a problem. When you can't compete, or I should say your margins aren't as good as, shampoo for your hair or toilet paper or diapers for children, then this is a commodity business. Like I was saying, they're selling cabinets and plumbing for data centers and so forth. So they don't command a very high margin. If I could show you Broadcom for a second, which is a data center company, and Broadcom's not the example I want to go with. I want to go with Nvidia. That's the perfect example. So Nvidia, and looks like I'm looking at the wrong Nvidia. When we look at their margins, when you have incredible growth and incredible gross margins, then your stock will fly up. And, I can't argue with the Nvidia situation. I think it's still overpriced, but nowhere near where I think Vertiv is overpriced, because you have lower margins, substantially lower margins. You don't have incredible revenue growth. So what gives? I guess it's being at the right time, right place, right time. And you are a data center company. So investors are just piling into data center companies. I think this stock is potentially going to really, really come down. Now, for the past 5 trading days, this one's down 7.51%. You switch over to Google. I like looking at the charting here. So it's been on a real tear, but it's down 7.5 recently. It over the 1 year, it's gone up 148%. Over the 5 year, 981%. And again, I showed you their growth isn't like, incredible, and their margins are not very good. So that's where the stock's been trading. We looked at revenue growth. We looked at margins, free cash flow. Where is that? How is that doing? Free cash flow, it's up to 1 billion. Looks good. 1 billion cash flow. Looks good. Now, can they sustain it? It's the big question, because they haven't proven that they are a big cash producing company. Last 2 years, they did that. But if you have a loss of demand for that data center, these guys are going to be hit. Right now, I think the market for a while has been expecting that data centers are just going to double, triple, quadruple the capacity. And that's not the case, but they are doing well. Now the free cash flow, I'm going to use 1 billion and say they are growing. So if I multiply that times 20, maybe even 30, that's a 20 to 30 billion dollar market cap company. So they're well above that, and 30 billion being the best valuation I give them, 20 billion being the least. And when I look at and I'm gonna look at their balance sheet just real quick, just to refresh my memory on where their balance sheet's at. So they are carrying debt, about $2.2 billion of debt. I don't think that's a big problem because they produce EBITDA of 1.5 billion. So they can pay off debt in a year and a half or so. Now I have run a full evaluation on Vertiv. My conclusion is that the stock is overpriced by 51%. Their cash flows can't sustain the stock price. And I even use a very high discount rate because I think it's a very risky company. And the earnings per share can't sustain the stock price. So this is a stock that I'm shorting. Not a big position, small one, but we'll see where it goes. We'll see where it goes. But the market's beginning to sell off. And I think it's going to sell off companies like this that are just really high priced, and it's put up or shut up time. You got to start showing me incredible growth. You got to start showing me profit. And I'm kind of putting myself in the shoes of the market in general, or your stocks are going to be sold off. February 19th is their earnings announcement. So we're over a month away from them announcing. Before that, the companies that announce that are related to the data center will move this stock up or down. But I think the heyday of this trade is pretty much getting old. I don't see it going up much more. It was incredible that they got this high, sold off, and then they went for another run. But a lot of these tech stocks have been selling off recently. It's going to show that, hey, maybe we don't have to look at fundamentals. We don't have to look at valuations, period of investing that we've seen over the last 2 years. Maybe that's beginning to be, expire. And now, hey, you got to look at revenue growth. You got to look at profits. You got to look at, how is this company going to be valued if they stop growing? And in this case here, again, the growth is not incredible. It's just okay. It's not like, oh my God, they're doubling their revenue every year. No, it's not the case. And their margins, again, are not very good. So Vertiv is a stock that I think is selling. It's sold off today. It's rallying in the after hours. So we'll see where it goes. One last bit of detail. Is there any short interest? There is a little bit of short interest, 3.44%. It's not zero. And I think if this thing starts to fall, it'll get more short sellers in there. I've got a tiny position that I'm shorting, and we'll see where it goes.